we'll start. Okay, good morning, everyone, and welcome to another episode of the Crypto Hour. Today, we'll be talking about a couple of things. One of them is obviously, we'll talk about both crypto and macroeconomics as well. From the macroeconomics point of view, we'll be talking about inflation and possibly disinflation, which what we could be going through, as we get into 2024, and what that would mean for the economy. And from the point of view of crypto, I mean, you must have been there, really blind not to see kind of like news of the SEC basically launching an all-out attack against crypto, in particular by suing Binance US and Coinbase, for being basically unregulated exchanges. And not only that, but they're also trying to include in all this decentralized exchanges too. So that is really kind of like an all-out attack on cryptocurrencies. Basically escalating what we're already seeing in the past few months. This is not new. We've gone through a variety of measures that have been aimed at making more difficult for people to get involved in cryptocurrencies, debanking not only the fact like for US consumers the possibility to get to engage with crypto, but also a lot of projects have lost the ability to have banking services in the US. So obviously, we need to always read between the lines, and thinking, why is this happening? It's because they're actually seeing it now, as there is a real threat to the power structure. Okay, because and I'm not going to mince my words, especially when you are looking at the possibility of the launch of CBDCs in many countries across the world. This will be kind of the ultimate fight against democracy and against the possibility of letting the many rule themselves, as opposed to the few deciding, what is possible for anybody to do. The CBDCs, if launched successfully, could be the ultimate big brother. Okay, because somebody knowing everything you own, everything you do, all your actions, to the point where, at the moment, many police cases, for example, are resolved just looking at your spending habits. Know exactly where you are at any time of the day. Whenever you use your credit card, you leave a trail. Funny. You might think, well, if you've got nothing to hide, then what's the problem with that? But it makes me feel very, very uncomfortable. Not only that, there is no privacy in the way that we decide to use what's ours, what we generated through our work, and could be actually turned against us. And this is the same unease that we have here, for example, in the UK against emergency measures, both from they give extra powers to the police, they give extra powers to, for example, the traffic authorities, because those powers once lost to these kind of unelected organization will never get back. So some of these are things that our parents, grandparents actually fought for, some of these liberties, and they are literally day by day they're being eroded and taken from us. So let's have a look at let me just share my screen so I can share with you what a second. Okay, close that. Okay. Let me just go a few pages. Okay, so this is what we've been talking about now for a few months. Okay, with this latest, actually, let me start from here. Okay, let me start from Bitcoin. So this is what happened on Monday. Okay, when this kind of like the Binance case was announced. So you can see the drop in Bitcoin price of over 5% in a matter of pretty much a few hours. Okay, and not only that, but also there were other cryptocurrencies that were mentioned in the suit as well, like Solana, for example. We can see here from again in the same even shorter time frame, it was like 12%. That Cardano, same thing. Where is that? Where's the measuring tool? 7% in a few hours, and then it kept dropping. Now Cardano now is down 15% since the announcement. Same, Solana. We're talking about similar percentages, yeah, about 15% as well. And when we look at some of the bigger projects that you can see, obviously, Binance being mentioned as a defendant, their token, the BNB token, being one of the biggest losers. As you can see, 16% in a week. We can see, Cardano, Solana, Polygon, most of them have been affected by this, in particular, those that have been mentioned. So it's not a kind of like a good time to be in crypto right now. But the funny thing is that, funny enough, what happened straight after that, kind of the day after, the couple of days following, pretty much, at least for Bitcoin, is just going back to normal. Because let's kind of like bisect this and see what is likely to happen. Now, they have launched a case, the same as they have a case against XRP. They now is coming towards this conclusion, and that could be very significant, because it could actually create a precedent then that these further cases will be based on as well. But what does this mean? If this has to go through the courts, and it's not guaranteed it will go through the courts, there is a high chance that Binance and Coinbase may decide to settle the case rather than fight it in court, because you see, the problem is this is where law and justice are two separate things. Okay, so from a justice point of view, you would have thought that anybody that is accused of something has a right to defend themselves. Okay, and although theoretically that is true, the way that the justice system is organized in the US, it means that for somebody like an organization like Binance, like Coinbase, to defend themselves would cost them hundreds of millions. Now, they need to, like anything in business, all these organizations will need to do a cost-benefit analysis. So whether they think they're right or not, and we all think they are right, and probably they would win their case, the same as XRP would probably win their case. Will it be worth going through like 2, 3, 4 years of court case before being proved right, and several $100 million in legal costs before doing that? Knowing some of the projects involved and how the deep pockets that they have, I suspect that they might actually decide to fight it, even because there is an increased need recognized by the legislators of having to legislate. So probably by the time that the case actually gets to court, there would be some proper rulings, in some proper laws that determine, what these companies need to do to be compliant. Because what the SEC is doing is suing them because, allegedly this company are not doing something that is impossible for them to do. So they need to say that they need to be registered as an exchange or whatever. But even when, both Binance and Coinbase especially Coinbase, because Coinbase being a US listed companies has reached out to the SEC on several times, because they want to be 100% compliant. Obviously, they want to be, whiter than white. But the SEC has always refused to provide any guidance on how to do things, just preferring to use rather than use the carrot, preferring to use the stick to bash everybody on the head, because they don't want to create a framework where cryptocurrencies can operate, because they know that there's no way that the banking sector can compete with that. And obviously, obviously the lobbying groups in the US are very, very powerful. And that, to be elected in the parliament or at the Senate, you need to have very, very deep pockets. And generally speaking, not many of the senators or the representatives have, unless you're Donald Trump, have that many funds available to them of their own wealth. So they need to raise funds. And then and who gives them the money to be elected are these lobbying groups, that they don't do it for fun or because that they believe in the Republican or the Democratic ideals. They do it because they want something back. Okay, so imagine the banking sector that is, is basically you can see as a license to print money. Do they want to lose that easy way to make money? Obviously they don't. So they will fight tooth and nail, dirty, more likely than above board, to keep their power. Now compare that though to other parts of the world where the financial sector is not as powerful, and we can see that the blockchain and cryptocurrency is still moving on and actually working in much better synergy with the regulators. So this, the reason why we see this, obviously, it's, for an investor in cryptocurrency is a worrying time, because, whether, and obviously I still believe that the cryptocurrency are here to stay and will be here and will be very, very big in our society in 5 to 10 years time. Obviously, the US fighting against it and trying to stop businesses like Binance, Coinbase from legally operating. It means that there is a liquidity issue in cryptocurrency, because there are less people buying and selling cryptocurrencies, obviously, because it's more difficult to do outside of central exchanges. I mean, central exchanges have become so big because they make a complicated action very easy. Okay, once you open an account with Coinbase, with Binance, you can buy and sell pretty much everything, in crypto, at least all the kind of the top 100, 200 projects. But, when you go to managing your own funds with your own, let's say, hot or cold wallet, things become a lot more complicated. Okay, so obviously they want to slow everything down. So although they won't be able to stop the blockchain industry, they want to keep their seat of power for as long as they can. So I'll show you a few articles. And again, this is this is an article that talks about the incoherent attempt to police decentralized exchanges, and we're talking about, they are trying to redefine the term exchange, which, if accepted, will bring decentralized exchanges under this under their oversight. Let's put it that way. Okay, so now this legislation is not new; it's 89-year-old. So, how do you think that this legislation applies to decentralized exchanges and DeFi? It's, good luck to them. But it really is, they are trying to block any possible avenue, because they realize that, if people stop using exchanges, then the next thing they do, they'll do decentralized exchanges, and then they will have to act against peer-to-peer exchanges. So it's kind of like they're doing things very thoroughly, step by step, but trying to redefine Coinbase and Binance as unregistered security exchanges, when registering for them is impossible, and now it's kind of like it's trying to create a catch-22 situation in a way, kind of like you can't operate unless you are registered, but if you operate in cryptocurrency, you can't register. So you see how they're trying to legislate through taking people to court rather than going through the proper channels, which would be through Congress and through the Senate to create the appropriate regulation. They are trying to do it simply by hitting people on the head with a club, okay, or compelling the banking sector without any it's just a guidance. There are no rules telling the banking sector go and unbank all these people. Okay, so it's even difficult for them to fight against it because there's nothing in writing. Okay, so this is the what we are fighting against. Now, Binance US also obviously being included in this as stopped at the moment the US dollar deposits and also the fiat withdrawal channels at the moment because they are being actively unbanked. Okay, now for those of you that are thinking, oh gosh, are we worried what's happened to our funds? We got a Binance account. This relates to Binance US, okay, not to Binance International. But even for Binance US, the exchange is still working fine. What is not working is the ability to make deposit in fiat money. So in sorry. I need to change the microphone. Can you still hear me? Yeah. Okay. So so the exchange, even Binance US is working normally. So you can still do the usual things. You can stake. You can do you can exchange cryptocurrency. You can deposit and withdraw cryptocurrencies, but not fiat money. So it's as usual. This is what they can block them from that, but they can't stop them from operating in the cryptocurrency world. Now, in particular, I mean, if I was in the US, yes, I would withdraw. Personally speaking, I would withdraw my cryptocurrencies from Binance US because you never know. You can never be too safe in a way. But from there to thinking that Binance is going to go down tomorrow is not likely to happen. For that to happen, it's a possibility. It's not impossible, but it will need a concerted action from the biggest authorities all over the world. Not just from the US, but from Europe, from Japan, from China, etc., etc. So obviously, if the same thing happened in several different jurisdictions, then there will be an issue. With Binance, but one of the things that you can look at is the proof of reserves. Where are they? Wait a second. Where do I find it? I know they're somewhere here on oh, there we are. You can see here this this symbol here. This is the proof of reserves. Okay, so for each different coin, you can have a look and see, what their reserves are. So this is what the accountants have recorded as the proof of reserve. Okay, so you can go and check how much money how much cryptocurrency they still got in in their reserves. So you can see, like here, for example, 6.5 billion in worth of Bitcoin. So it tells you why, when we look at these, that explains why the kind of this price drop, because people being worried about Binance, and obviously they had a lot of money in the coffers, depositors' money. Some people would just transfer maybe the Bitcoin somewhere else. But some other people would think, actually, I'm worried about liquidity issues, so let me just sell my Bitcoin altogether. So that's why we see these, this really rapid drop when an announcement like that happens. And same thing for Coinbase. So we had, both Binance and Coinbase, very one after the other, being sued. So it is a worrying time. Now, on a slightly different thing, you see, the US recognizes that there is a need for digital asset legislation. So one of the things that is going through now, the third draft, is a stablecoin bill. Okay, which I personally believe it's needed, because stable coins are the vehicle that goes in between the fiat world and the crypto world, and literally just represents dollars they have deposited in the banking system in the US. So from that point of view, if it is an organization that collects huge amounts of customer deposits, they should be regulated. Okay, so we'll see what once it actually goes to passes the the legislative process. See what it will mean once he has his final draft approved. But I see as a positive move, actually, because in every place where when eventually we have got regulation, unless it is really draconian, generally it promotes growth, because it gives a solid standing for projects to make their plans. What business doesn't like is uncertainty. At the moment, the whole cryptocurrency sector, is working under a huge amount of uncertainty, because they're creating a new rules, a new way of doing things. So not only is it difficult because these things are complicated, but it's also difficult because they're fighting against the existing power structure, existing organizations that they are looking to change for a better version in a way. Okay. So I'll say we're seeing these things in the US, against Binance and Coinbase, but what could this look like? And we have, there are examples now, like in Europe, where this legislation has been passed, and the same from Singapore. So, I'll say there are other places in the world where this isn't seen as the devil, but is seen as a technology that is worth supporting and regulating. So obviously everything needs to work within a certain framework, but this needs to be also just comparable to the frameworks that are available to other sectors, and not to be unduly restrictive, simply because there is a new way of doing things. Okay, so this is where the US is putting itself on a different path from other countries like Europe, like Singapore, in a smaller way, like the UK as well. So other places on the world are encouraging blockchain projects. The US is actually going completely against it. And funny enough, even China, although they have made it difficult for people to deal in cryptocurrencies directly, but they are promoting blockchain and blockchain projects. So the US is really standing alone at the moment. On a real world, and this is what many times I've told you, that for me, the real innovations in cryptocurrencies will not come from the US or from Europe, but will come from the countries that need it, because they institutions are not strong enough. And so they're saying that there is rising adoption of crypto cards in Brazil, but not only to to buy and sell stuff, but also for buying crypto and using coins instead of fiat money to pay in stores. So now in Brazil, there are more and more people are actually paying for, at the bakery, at the coffee shop, or going to the restaurant. I'm paying directly with either using crypto-powered cards that gives the receiver the equivalent in local currency. So the card does the conversion at the point of sale, basically, or literally facilitating crypto payments. So there are some businesses that accept payments in crypto, whether it is Bitcoin through the Lightning Network or stable coins or any other way of getting paid. But this is now increasing in South America, where many countries are fighting double-digit inflation. Think about Argentina. Interest rates are 97%. Now, why would you want to have Argentinian money in your bank account? You don't. I mean, as soon as you get it, you would exchange it. You would exchange it for something else, because at least that would keep its value, rather than having a currency that devalues, in front of your eyes almost. And the same in different countries in Latin America. Obviously, we all know about Venezuela, which is even worse than Argentina, but even in countries like Brazil and other places. Just think about that. Many people don't have a way of accessing banking services in South America. Not as bad as in Africa, but even in South America, many people are cut out from the banking system. So the ability to be able to use crypto is a big improvement from being able to manage their finances compared to just having to use cash. Okay, and one of the biggest proponents of crypto, Cathie Wood, CEO of ARK Invest, and she still, even after all this, she still sticks with a 1 million valuation by the end of the decade for Bitcoin. She thinks that Coinbase will come out as a winner in this case. It remains to be seen if they are going to fight in court, or if they will look for some sort of deal. But the case against Binance is actually serious, more serious than the one against Coinbase. But the fact that they have come out one day after the other is trying to muddy the water as well for Coinbase. Yeah, so it's not all kind of like doom and gloom. And if you ask me, actually, as long as kind of the main confidence in crypto, measured mainly by Bitcoin and Ethereum, holds, then this could be a really good opportunity to buy some of the other big projects at a discount. Look at discounts this week. Maybe want to stay away from BNB, probably. But Cardano is a 15% discount, Solana 11%, Matic 14%. You can see all the others, some of the other big ones as well. Uniswap. Uniswap are sitting on a mountain of cash. Cosmos 12%. These are very good, and from already low levels. So they dropped this much from a kind of, they were sitting at 2 years low. So I personally see it as an opportunity rather than a moment to cash out and go away. There's a kind of like Charles Hoskinson, the founder of Cardano, actually very strongly rebuffed the SEC talking about kind of like ADA as a security, and he says under no circumstances ADA security under US securities law, and it never has been. Okay, so the thing is that there are, and this is what has been all along. There is so many inaccuracies in the filing because they don't understand properly the world of cryptocurrencies. But this, I mean, at least this is what he claims, is that this will not impact the operations of IOG, the company that he runs, which is one of the founding members of Cardano. Funny enough, from another thing that came out from Binance is that Gary Gensler, the head of SEC, actually proposed a partnership. Actually, wanted to be employed by Binance, you know, to head their compliance. So it's kind of like quite you know, it is quite funny to hear that, because he should literally, if this is true, he should literally recuse himself from the lawsuit, because he's an involved party. But you know, we'll see how this develops in the following weeks. In other countries, as they talk about here, the UK, where now 20% of the UK now apparently owns cryptocurrencies, and there are now crypto regulations that they are kind of like coming on board now. For example, from UK exchanges, now when you establish a new account, you have to wait 24 hours before being able to buy any cryptos, and there is kind of, you have 15 days to you know, to come out of any initial purchase. So there is slowly regulation is starting to come into existence in the UK, because now it's become something quite mainstream as well, where a big chunk of the population now is involved in cryptocurrencies. Where are we? Oh, this is an actually bit. I think there's a. This is one of the projects that have been launched on Cardano. I mean, you might have heard about World Mobile, which is a project that is trying to connect the unconnected. So to especially operating in rural Africa, you know, in all the countries that the big telephone operators, in all the kind of areas that don't want to offer service because there isn't enough in it for them. Okay, and World Mobile wants to get into that niche and offering a kind of like a mesh internet service to the population, and they have a technology they are now tested in Kenya, Mozambique, and Nigeria. So it's so this was a successful test, and this will be then it's already, the service has already been launched in Zanzibar. But now they are looking to expand it into these other countries as well. And they use as a backup, they use the SpaceX Starlink satellite system, and it's kind of like it could be kind of like a game changer in Africa, where, because there are, I would say, about over 3 billion people that don't have access, they don't have any way of accessing the internet. And although it would be, it would make a huge difference to a lot of communities, being able to operate on a kind of a national and international scale, as opposed to just having to dealing things locally. So even in businesses like fisheries and things like that, being able to sell their wares rather than to the local wholesaler, to sell it to an international buyer wouldn't, you know, it's already been proved that it not only makes a huge difference in terms of profit, but does change community in an incredible way. So you know, good kudos to them for putting their resources into this. And if you've been in Cardano for a while, you probably might be an investor in this because it's one of the first projects that was launched, and it's also like a good feel project, from that point of view. Now, I just wanted to do a test in you. Now, if you think about long term, where would you think it would have been, let's say 20 years ago or something, like look at it from the early 2000s? What would have been the best way of investing your money? Anybody want to guess? Or we can have a look at on the charts of we go into long-term charts like weekly charts. Anybody want to, what kind of sector drawings, what kind of sector you want to look at?
Housing.
Sorry?
Into housing, flats and houses.
Okay, housing. So this is, we're looking at it through the ETFs. Okay, so obviously these are mostly US thing, but you can get this data from many countries. Okay, so this is looking at the real estate sector in the US. So it looks like, if you invested in kind of the 2000s, going at whatever was like 12, 15, and now is about 85. We're looking at about seven time growth. Yeah. But what about if we measure it in gold? Things slightly change. So if you add in whatever in 2000, you've invested in property as opposed to just buying some gold. From a capital point of view, obviously property has got like, you will get paid some sort of rent or something, but just from a capital point of view, it actually would have lost you some money. And you can see this is a good way, sometimes when you measure things against gold, it is a good way as well to see when markets are overvalued or when they are undervalued. If we, on top of that, we put a simple moving average, okay, we change it here to a long-term one. So we look at a 200 period moving average. So we are on a weekly chart. So this will show you what's the blue line will show you what the average of the last 200 weeks, which is roughly the last 4 years. Okay, so roughly you can see that when price is above the average, we can say that the market is a little bit kind of overvalued, and when it's under the average, it's a little bit undervalued. So you can see there was like the roaring at the beginning of the 2000s. There was like a real bubble in the housing market, and then obviously we had that led to the 2008-2009 crisis, and you can see here what momentous drop that was, 82%. 82% in terms of gold. So let's say that if you had the kind of the foresight of selling a house for gold up here, you would then in 2 years' time you would have been able to buy 8. Just to put things into perspective. Okay, so I'm not saying kind of like just buy and hold gold as the main investment, but it makes you realize when things actually have gone up, or if they increase, it's just simply because money is worth less. Okay, and this is why we see, the why from 2000. If you look at the nominal figures, actually looks like the market has actually grown incredibly by 700%. But if you look at it in gold terms, it's actually gone down. Another thing, maybe some people would like to think, the financial sector, banking and financial sector have done really well. So let's have a look at it. XLF, which is the financial sector ETF. Again, I think you will realize that this wouldn't have been the greatest of investments. Okay, again, from the early 2000s, he actually would have lost about 2/3 of its value. Although you might say that after he hit the bottom in 2009, he's actually quadrupled in value. So depending on where your entry point is, but we're looking here at long-term trends. Okay, actually speaking, so some other sectors, I mean, obviously have held their value better. Like, for example, look at the utility sector. You can see the utility sector have kept their value better. They are close to the 2000 value in gold, and you can see that because utilities are in a way almost counter-cyclical, are the things that people invest in when everything else is going wrong. So even the up and downs are not quite as pronounced as other sectors. Surprisingly, the ones that have better results, and I was looking at that yesterday just as for a bit of fun. Obviously, you can imagine if you look at the S&P 500, the top in the top 10, most of them are technology stocks. Apple, Google, Amazon, Microsoft, etc. Netflix. So this is probably one of the sectors that has actually done better. So where were we in 2000? So is actually now just above the level that we had in 2000, and obviously is shown an incredible growth since the pandemic, but also from the bottom in 2011, it's grown about 8 times in that time frame. But the other surprising area of growth is the consumer discretionary. So I mean, things that we don't really need, but we do buy anyway because it makes us feel better. Look at this, for example. It is definitely one of the best areas as an investment from over the past 20-25 years. It's been a great success story in a way. So sometimes the reason why I'm showing you this is because numbers and statistics must be examined carefully, because people can show you things to believe their narrative, and politicians do that all the time. Okay, so things are bad now, but they're not as bad as when the previous administration was in place, or so on, or we're only doing badly because they left us in a bad state, and so on. So what I can show you now is, let's come back to the kind of more recent times, and where are we going right now? So at the moment, the leading indicators are showing us that there are many drivers of inflation. They're all pointing downwards to a point where we will get to probably we get to the target rates by probably by the end of the year. Okay, towards December, and so we can see the deflationary measures, excuse me, apply to small businesses, but also not just to manufacturing. Manufacturing has been the first to show the decline, because as the situation, people have got less money to spend. They got less money to spend on new things, so the manufacturer always expect lower demand, and so they order less prime materials and so on. Okay, but so you might think actually it's a good thing, because obviously we're all waiting for inflation to go down, so they won't raise interest rates anymore. We can see the housing inflation. It's showing signs of slowing down as well, and again, the rent lags by about 12 months, so it's starting to decline now. So it's expected to go down again to much lower levels by the end of 2023. So going down to below 4%. Now, inflation is actually going down faster than you might think. Okay, and inflation. So just to talk about things, it's always a monetary issue. Okay, now this is what we see. The CPI, the blue line, is the CPI. Okay, so Consumer Price Index, which has started to come down, okay, from the middle of last year, and is now pointing down. But if you look at the orange line, this is the credit impulse. Now, not all money is equal, okay, because when you think about it, not all the money that is created is actually spent, because if you got cash in your hands personally, then you will go out and probably buy something with it, or invest it, or do something active with it. If new money that is created, and this is where what is normally referred to as the M2 money supply, if it's in banks' reserves, it doesn't enter the economy, because banks don't lend their reserves. They lend your funds, and the funds that you deposit in the banks. And at the moment, by the way, there is the reserve requirement is close to zero. Okay, normally, if you deposit $10,000 in the bank will be able to lend a number of times that amount out. But generally, they would have to keep a little part of it in reserve. Now, at the moment, temporarily, those reserves are being pretty much ruled down to zero. So we are creating we have been creating a credit bubble again, similar to what we had in 2008, 2009. Now, if you remember what happened in 2021, when we saw this huge spike in credit impulse, do you remember what happened in 2021 in the US? Anybody? They wrote everybody a check for 1,000 stimulus checks. I think it was $1,200, something like that. So literally, they gave money to everybody to stimulate the economy. Okay, so there was this huge increase in money in circulation, and this is what caused them this, increase in inflation, because the amount of goods in circulation is the same, the amount of money grows all of a sudden a lot, so there's more competition to buy the same things, prices go up. Okay, now from then the end of 2021, beginning of 2022, there has been a progressive monetary tightening, higher interest rates, less, so the easing then of this money in circulation has been made tighter and tighter. And so this is where we are leading towards, not only going to kind of a target inflation rate between 2 and 3%, but probably we are going towards a disinflation in 2024, sorry, where there will be a negative inflation figures. Now, this inflation, unfortunately, is not good for the economy. Although you might think, oh, great, so my money, 1 year from now is going to be worth more, and you would be right about that. But think about it. If you can buy something today, and you know that tomorrow, because your money is worth more, the same thing is going to cost you less, would you buy now or would you wait? You probably would wait. And you're thinking, why do I have to buy a car that I have to spend maybe, I don't know, $30,000, but in 6 months' time I might only have to pay 25. So from the economic point of view, this is not kind of like good because it doesn't stimulate the economy, doesn't stimulate investment. Instead, it actually people sitting on their funds for longer, waiting for things to get cheaper. So, and this is why so this is what I was talking about is what we're talking about, real economy money. So money that is in the hands of consumers to be able to spend it. And as we see the global credit impulse has gone down, as you can see from the 2021-22, what happens then is this shows in the orange histogram here in the earning per share of companies. So as you can see, kind of quarter by quarter, the earning per shares have gone down and down and down, and these are expected to carry on going down for a while longer. Now, what could happen, and there are different scenarios, so there is no certainty here because a lot of it will depend on decision made, and this is why everybody tries to understand what's in the mind of the regulators. Okay, but the fact that we are going towards a recession is almost like widely accepted across the board, but there are two ways of recession and disinflation, two ways that could happen. It could happen like in 2019, okay, which is considered like a soft landing. Okay, so we see an inflation going down gradually. There is a recession, but it's it's a shallow recession, bottoms out, and then things start growing again. Now, what did that mean for the point of view of equities and commodities and so on? Equities in the US from 2019, they grew about 30%. Outside the US around 20-25, and commodities grew by 15%. So that's a kind of like a good soft landing. The other possibility is that we have a much harder landing, like we had in 2008 and we had in 2001. And then it's a slightly different scenario. So then we are looking at, even from the bottom that we had this year, we're looking at further 15 to 30% drop in the price of in major stock markets. Now, you would think, and I know that many of you are thinking, okay, so if this is the scenario, what do I do with my with my wealth? What do I do with my funds? So there is in either one, whether it's a soft landing or it is a kind of a hard landing, the one thing that should keep its value and its price, it's bonds. So so that's the one thing. And for the best case scenario, in a way, you see, with the and this is kind of something that I would like you to pay attention to. Yeah, we got earning per shares going down, but what have the prices of the shares done? Look at the Nasdaq. The Nasdaq is hitting new highs. The price of the shares are kept going out. So if the price of the shares goes up, but the earning per share goes down, that means that the valuation, the multiple of the stock valuation is growing. So where before you might have had a multiple of, let's say, 5, 6, 8 times the price is a multiple of these earning per shares, now that multiple has grown to the 20s and 30s. So indicating that they're not, a lot of the stocks, they are hitting new highs right now, that they're not fair value. They're like inflated prices. And and again, try looking at that as well. You can do any singular share as well, priced in gold, and see what the graph looks like. But we are looking at inflated values of a lot of things. If you want to invest in shares, I will then look at markets that are at fair value. Okay, so that would mean looking away from the main markets of US and Europe and looking at different markets. So the success story, the kind of the markets that are actively growing with lower valuation at the moment are Japan, Latin America, and in Europe, Poland. Poland is a success story. So so those are the kind of like things that in a way to be in right now is a time to be defensive at the moment, not to be kind of like on the offensive, because there is still pain to come. So that's at least is my the way I see things, trying to base it on data rather than on like feelings. But this is what I am thinking. And from the point of view of crypto, which is again maybe a bit less data, a bit more feelings from that point of view, I believe that a lot of people that are involved, and the good projects that are involved, are fighting for our liberty. And those are people that will fight to the death, really. People that got involved for the right reasons, not because it's they can make money, but because they believe that we can create a better way of regulating society. So I would say, be careful out there. In any sector where you think of putting your money, try and be defensive. As this is a crypto hour, we're talking about crypto projects. Please just keep to the solid projects. You don't need to go too far. Yeah, when you go on the list of the top coins by market cap, don't go to the high numbers. Okay, just keep to the even really at a stretch, just don't go below 100, because there's no need. There's plenty of good projects here. They are at really low valuations at the moment. So if you believe in crypto, first of all, again, look after your own coins, your own money, away from exchanges as much as possible. Just use the exchanges to do quick swaps, because they're a lot cheaper than anywhere else, and then move. Once you got the funds that you want, just move them out. The only reason why you will keep money on exchanges is if you want to do active trading, and obviously you need some funds to do that. But apart from that, be the master of your own future, and don't rely on exchanges or banks. That's a different subject. Okay, so I think I have managed to speak for a whole hour. Okay, let's have a look. Anybody has any questions? A wife's shoes gained on value over the last 20 years. Yes, you're right. Probably right, Eric. But I don't know if the used shoes will be able to have so much value. Yeah, if you have the new with the box, like with the untouched, then it will be a different subject. Any comment of the Akinov atomic wallet? Yes, there are, and this is kind of like a big worry right now. We're thinking, where do you keep your funds? Even exchanges are being hacked. Decentralized exchanges are being hacked. Even software wallets are being hacked. There is worry about Ledger. We were talking about last week, Pierre. I don't know if you were there or not, but probably the best solution, what I can suggest, is to go for open source projects. Like if you're going to a cold wallet, we're talking with Jonathan. I think probably the Trezor Model T would be a better solution right now. Or again, if you go for hot wallets, then look for open source projects, because then there are no surprises, there are no backdoors, and there's many people looking at the code for these for everybody. And if problems are found, then solved for the benefit of the community rather than for the benefit of the software provider. S&P to gold. So let's have a look. Question. S&P to gold. Yeah. And you can do, by the way, I don't know if you guys are using TradingView, but on TradingView, apart from graphs of anything, you can put formulas. So so you can put whatever formula you like in here. So this is the S&P gold ratio. That's the one. Okay. So depending on where you look at it from, and looking at it from, from the 70s, goes back from 75 here. So it would have grown from the beginning of this data. It would have grown about, 6 times, no, whatever, 5.5 times. But from the 2000, there literally has been no growth. No. Even from the low point in 2003. I mean, if obviously this was the bubble, but if we go even below the bubble, literally you could have kept your money in gold under your bed, and it would have done better than buying and selling stocks. At least this is generally speaking. Okay, this is talking about the S&P 500. Okay, so obviously individual stocks may have done a lot better or a lot worse than the average, but the average says that from, if you were lucky and you converted, let's say, you had money to spend, let's say in whatever 2003, even if you spent it at the right time buying shares, at the best time you still have lost money in 20 years. Okay, in terms of gold, I'm not talking about in purchasing power. We're talking here. So these numbers here really are considered as purchasing power. So in purchasing power, you would have slightly lost about, not a lot, but 1-2%. But in obviously it would have been fairly similar. But if you have bought stocks during the bubble, then you would be in a bad place right now. Okay, because here from 99 to 2001, you would have lost more than half its purchasing power. Again, if you bought at the end instead of the recession, and this is also kind of a difficult thing, because it was a long time before stocks started growing again. So we're going from the bottom in 2009 to 2013. So if you bought during those 4 years' time, even at the top, you would have then doubled your purchasing power. So it's a matter of timing, apart from anything else. If you buy at the right time, then things will go well for you. But it's not always just investing in stocks and shares. It doesn't guarantee that things will go well all the time. Sometimes they do, sometimes they don't. And this is where this comes into view. Like when you see this, I mean, the something like price or something against gold moving far away from the average. Always use a long-term average, like a 100 or 200 period. The way you do it, you go here. Once you put your average on this, okay, you go into the settings and change the length. Okay. We go in a 200 period moving average. You see here we are well above the average. And sometimes, the average means that some time is like an elastic band. Prices will snap to the mean. So it might take a long time. So from the time when we moved down to below the average, 2001, it took 12 years to go back above average. So yeah, it can give you, looking at things in gold terms rather than in monetary terms. First of all, it kind of takes away inflation from the figures, and secondly, it can tell you if if you are looking at a bubble situation where where is, let's say, S&P 500, or you are looking at, for example, the housing, real estate. It's the same thing. You can see where the real estate bubble is, okay, and you can see when the prices is further away from the average, and you can do statistical analysis of this, and you can measure the standard deviation from the average, and that will give you a good indication of where the prices are compared to long-term average. Okay, now you see, buying at the right time, so you can see when prices here, where the furthest away from, look at the distance here, from when we are at the bottom, look at the distance from the average. At some stage, even at the bottom of the curve, or the average line, there's still a massive profit here. This is doubled in price if you manage to buy at the bottom. At the same time, you can have a look at the distance from pretty much from the average, and we'll have a look at different times. Have we got like those kind of levels? This was the peak of the notice, okay, in 2005. See, at what other time have we got to such inflated house prices? And you can see here in 2015 we got to that level. And if we then go and measure from the top of that, you can see now from when the prices are inflated, we still haven't caught up, and now we're well below where prices were in 2015. Yeah, they kept bouncing across the top and gone up for a little while, and then boom, we had this drop in 2020, then gone back to the 2019 highs, and now we're well below it. So you see, buying at the wrong time, it can be kind of like a real problem if you buy at the wrong time. It could also be a big opportunity. Look at this. This is the same. I haven't touched this line, so it's remained the same size. Okay, so here. Look at where the opportunity was during the pandemic. Okay, this was the biggest opportunity of our recent, I'll say of our lifetime, but of recent history, the past 10 years. And here, if you were in property and you started selling some and invested in other things, you would have done really, really well. So just think about it. Realize that, if you realize that, to make you think about how to shift. Our value should be kept in a way that holds its purchasing power. It doesn't mean that it's, there are some assets that are fantastic at certain times, but it doesn't mean that you have to be married to those asset classes. If you do what the big investors do, you would do what is called sector rotation. So sometimes better to put money in things that are riskier, sometimes is in things that are safer. And if you keep employing in the best way, then your purchasing power will grow. If you just rely on one asset class, you're just basically flipping a coin. It could go well if you buy when things are undervalued. It could go very badly if you buy when things are overvalued. We're still very far away from going back to 2005 prices. Okay, still about half, pretty much, the value of property in 2005 in real terms, once you strip off inflation. Okay, so yeah, this is kind of like a sobering thought, isn't it?
Lucas, thank you for that, because now you've got a real measure.
Sorry, Chad?
I say thank you for that, because it gives you a real measure now. You're taking inflation out of the picture.
Yeah, definitely, exactly that. This is why this is why it's good to use, something that is stable. And obviously, gold more than other metals, pretty much as as a stable supply and a kind of very measurable, stable inflation. So it's used as a constant when you compare against other things. Jonathan, probably the last question from Della. You probably have more experience than me in this. Can you give some example of open source hot wallets that are available? Well, I don't use hot wallets, so
yeah, it's quite a tricky space. There are not many great open source hot wallets, even. So so for example, for a multi-chain hot wallet that I use is Exodus, and that has portions of it that it's open source, but not all of it. So in any hot wallet scenario, you're kind of struggling a little bit. At the other end of the scale, you've got some very small wallets that are fully open source, but then you're dealing with a small project, so you've got less eyes on it, so the vulnerabilities are less likely to be picked up. So really what you're looking for is a large project that is open source, that has lots of developers assessing the code. And we don't have that really in the open source hot wallet area at the moment. There are some little ones like a quick Google will find MyETH and Mycelium, I think is another one. So, but these are tiny wallets that not massively popular.
Yeah,
so even in
what we kind of like Charles Hoskinson was trying to do with Lace. We were talking about it last week, weren't we?
Yeah. So even in Cardano land, like there are open source wallets. The largest ones aren't. The smaller ones are. Lace is open source, but it's not. It's only just been launched. So in time, then that would probably be a good one to go for. But yeah. And of course, it's got some of the best developers in the world on it, so it's probably a good one anyway. But yeah, it's a tricky space.
Yeah. So I know it's a difficult thing at the moment. I'm going to, for myself, I'm going to order a Trezor as well. I've been using Ledger, but I think I'll move to Trezor after their advance. About the news about Ledger and the possibility of a backdoor. So yeah.
The thing I like about Trezor is that they're the oldest hardware wallet. So they're before even Ledger existed, and they've been open source the whole way through. So that shows their intent and they're sticking to their guns. So it's probably a good move to shift our spending power over towards good operators rather than Ledger, who seem to be compromising their principles a little bit and just making it easy.
Yeah, definitely. Okay, guys, and Jonathan, please again post your link. I think everybody here has been here before, so you will know. Jonathan runs this Cardano sessions at 9:30. So I will it says 8:30 UTC, which is 9:30 now in the UK. So every week, so you can do kind of this session first, and then have a little pause, and then go to Jonathan's session. I highly recommend it, and especially because I know we both believe that Cardano is probably one of the ecosystems that will emerge as one of the winners for the future. And so anything that goes on in the ecosystem, like now just the latest funding round has been launched. So there are the actual catalyst. So the community is generating like $50 million of funds that the community itself will decide how to deploy, which is amazing. So this is a self-generated system, which is like a virtual system that's getting bigger and bigger and bigger with every round. And so this round, actually 50 million are going to be invested in community projects.
That's 50 million ADA, not dollars.
Yeah, 50 million.
Yeah.
Sorry.
Yeah.
50 million ADA. So it's growing all the time. So some of the kind of transaction fees go back into this. And then you just imagine if that could happen as well in our democracy, So all the participants that own ADA have a voting power, and obviously they will support the projects that they like best. So do you think then once this project launch, that the community is going to be interested in them. Of course, because they are, they have supported them all the way through. So it's also a virtuous launch pad, because the projects that have more community support get funded, then get launched, and then the community get to use these projects that they wanted somebody to develop, which is fantastic. So anyway, I think we've gone a little bit over time today, so it leads me to wish you all a lovely weekend, and I'll catch up with you all next week.
Thanks so much, Luca. Have a nice weekend.
Goodbye.
Thank you.